The time is 2 p.m. This is the Monday edition of Market View right here on Eswatini TV. My name is Nosile Tole and thank you for tuning in. Coming up on the program today, a crucial conversation on the future of work and social protection in Eswatini. The International Labour Organization has supported and presented an assessment report on the creation of a national unemployment benefit fund to provide a safety net for workers who lose their jobs, cover sickness and maternity. But how will it be funded? Who will manage it, and can it truly deliver in a country where public trust in state institutions is on the decline? We sit down with the International Labour Organization on the establishment of the fund locally. But first, our business news. In our business news this afternoon, with Business Eswatini raising strong objections to the employment bill, proposing a ban on triangular employment, a practice where workers are employed by one company but supervised and work under another. CEO Inati Dlamini warns that this could result in the loss of about 22,000 jobs. The Minister for Labour and Social Security, Honourable Philip has stepped in to explain why this bill is critical, especially at a time when employment creation is a national priority.
They are under the insinuation that labour brokerage, once it's abolished, it will also nullify subcontracting, which is something that's far from the truth. Subcontracting will continue as it's been happening, but will only be trying to do away with the triangular form of employment because we've had many concerns along the streets in Parliament. There has been 2 resolutions by the House of Assembly on that issue, and for us is to comply with that. That is why we've come up with this bill, to make sure that we get rid of labour brokers, because the main complaint is that workers' rights are not protected there. Once you raise a complaint at a workplace, the one who owns that establishment has no obligation to make sure that all your expectations are met in terms of working conditions and terms of the form of employment that you are hired on. So ours is to protect workers' rights. Make sure that whoever is employed has a right and is given a platform to voice out and have an opportunity to engage with his employer on issues of terms and conditions of service, as opposed to what is obtaining in the triangular form of employment, because in that kind of setup, Emaswati are exploited, they don't have a voice, and there are no programs to make sure that there are some social security nets to protect them. So ours is just to make sure, as a ministry entrusted with the responsibility to make sure that workers' welfare is taken care of. It's part of our mandate, and that's what the bill seeks to achieve. The other issues that are contained in the bill are issues of the forms of employment. We have workers that are being exploited, unfortunately, in some sectors where they are hired on casual basis or contractual, instead of contractual basis, on contractual basis, which are short-term instead of long-term, and they cannot plan for their future. They cannot take loans. They cannot, commit themselves in any financial obligations because their terms of employment are not that favorable. So that's another area that the bill seeks to address, to make sure that if you're doing a work that appears permanent, be permanently employed or be bound in a long-term contract. If you're hired as a casual worker, it shouldn't be more than 24 hours a week. And for any other employer, he should make sure that all his employees are expected to work for not more than 48 hours. Once it exceeds 48 hours, they'll be expected to pay for overtime to those employees. There are issues of maternity leave, the number of days there. The bill seeks to improve the terms.
In a bold move to boost transparency and strengthen supervision of the non-banking financial sector, the Financial Services Regulatory Authority has launched the Bank Supervision Application version 5, a powerful tool designed to enhance compliance and enable real-time monitoring of non-banking institutions.
We are a financial regulator regulating the non-bank sector, and to regulate we need data which is provided. We use this system to get the data from the FSPs. They submit on the system, then we also use the system to regulate and supervise. So given that there are developments, we are always forever trying to enhance our supervisory work, our supervisory tools. So now we are migrating from the version 4 to a version 5, which will allow us to be better placed to deal with the data that is submitted by FSPs, to give us far better insights and to be able to have a 360-degree view even on the data that we have on the FSPs that we regulate, so that we safeguard and ensure a better and sound non-bank financial sector.
Ngamiso Mavuso, IT Manager at the Financial Services Regulatory Authority, unpacks the new application.
With this new version, what will happen, we expect that we will collect more information, generate more insights, and also these insights would assist us in proactive decision making, which we have an area which we have been lacking on. It will also allow us to introduce what is called risk-based supervision, meaning that there will be indicators that we will be looking into, monitoring now and again. We can see actually what everyone is doing at the same time. However, because on version 4 we had to carry out the supervision physically, meaning visiting all FSPs. With this system, we will have that 360-degree view at any given time, so we know what the risk each FSP is facing, and we intervene on time as well.
The Financial Services Regulatory Authority oversees the work of approximately 400 non-banking financial institutions, and they have indicated that the innovation is a critical step towards enhanced compliance and transparency. Reporting, Nelson Ngamandla, Vominkosi Nzinisa, Ezulwini.
All right, now those were just some of our business news coming in at this hour. For now, we'll catch a break. After that, we're in conversation with the ILO in our Enterprise Watch segment. Stay tuned.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Welcome back. You are still watching Market View. In this next segment, the International Labour Organization has released a report where it was assessing options for the institutional framework and operation of a national unemployment benefit fund in the country. To unpack the findings of this assessment and further explore the scheme, including who is supposed to benefit from it, how contributions will be made, and at what percentage, we are now joined live via video link from Lesotho by Jasmina Papa, Social Protection Specialist at ILO. A very good afternoon to you, Jasmine. Thank you so much for joining us. Could you elaborate on the proposed structure of the fund?
reduction of unemployment.
My apologies there. It appears we're having a technical issue. Jasmine, we're having a technical issue with regards to audio. We'll catch a break. Hopefully our attempts to be in contact with you will be successful shortly.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
And we're back. As I had introed, the International Labour Organization has released a report where it was assessing options for the institutional framework and operation of a national unemployment benefit fund in the country. To unpack the findings of this assessment and further explore the scheme, including who is supposed to benefit from it, how contributions will be made, and at what percentage, we are now joined live via video link from Lesotho by Jasmina Papa, who is the Social Protection Specialist at ILO. Good afternoon again, and thank you so much for your patience. Elaborate on the proposed structure of the fund. How, as the ILO, you envision it to, be operational in terms of setup and effective and sustainable as well?
Good afternoon to you and your viewers, and I hope we'll be luckier with the sound this time. So the Kingdom of Eswatini really wished to introduce short-term social insurance benefits, unemployment insurance as the first benefit, and it has drafted related bill towards it. The benefit has to be managed, operated by a certain fund. The government had two options: to establish an independent institution on its own right, or to choose between existing operators of different types of social insurance benefits. The assessment has shown that actually independent institution on its own right might be the best option for Eswatini. However, if we are concerned about implication of administrative costs of such an institution, there are possibilities at looking into existing funds, Eswatini National Provident Fund and Public Service Pension Fund. The assessment really looked into the operations of both funds and has concluded that the second best option to operate unemployment insurance is Eswatini National Provident Fund. This is because the ENPF already has in place structures and procedures to reach out to public and private employers, knows how to register them and how to distribute benefits, and is able to monitor the compliance with contributions, that the contributions are made in time and regularly.
All right, before I move on to the second question, Jasmine, may I just apologize to our viewers here in terms of the picture quality. We are having some network coverage issues, but however, we'll go on. Hopefully, we'll be audible enough. Eswatini is currently working on the unemployment insurance bill. How will this new fund align or rather complement the proposed legislation?
So the proposed operationalization of the unemployment Insurance Fund is fully aligned with the draft bill. Draft bill presumes that there will be unemployment insurance benefits. It also lists who the contributors for the benefit will be and what will be the amount of the benefit. The draft bill also presumes that there will be a fund set up that will operate such a benefit. So in fact, this assessment actually supports finalization and implementation of the draft bill.
Should we see the fund up and running anytime soon, who would be the primary beneficiaries?
Primary beneficiaries and contributors, of course, would be all formally employed in public and private sector. They would be contributing 0.93%, both employers and employees. Each would contribute this same amount, which would mean that people, should they lose their job, workers, when they lose their job, would get the 3 months unemployment insurance benefit at the 50% of the minimum wage in the particular sector.
Just to take you back a bit, Jasmina, with regards to the establishment of the fund, yes, the government prefers an existing SOE to run the fund, but as the ILO, you recommend that a standalone entity administers the fund. Why is an independent institution so crucial? And what are the risks? Should ENPF or the PSPF take lead in terms of administering the fund?
The independent institution is better placed to manage the insurance because it will be able to follow the trail completely from the collections to the end, to the disbursement of benefits, and it will actually have the social insurance benefits as its own best interest, and it will have them in focus. Also, the independent institution could be seen as a foundation of a social security institution as per social security standards, which could then manage other short-term and long-term benefits. Eswatini also intends to introduce in due course. That's the key point of having independent institution, really to prepare for comprehensive social security system, which is one of the goals of Eswatini's national social security policy.
Jasmina, thank you very much for your time. That was Jasmina Papa, Social Protection Specialist at the ILO, coming to us live from Lesotho on the Unemployment Benefit Fund that intends to be established here in the Kingdom. For now, we'll catch a break. After that, we're in conversation with in-house economist Sanele Sibia for our market analysis segment.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
When you choose your adventures, you do so with an open heart and a desire for the unexpected. You embark on journeys to discover new worlds full of wonder. You choose a path to awaken your senses, a world to make you look up and realize just how inspiring this life can be. Arrive and awaken your heart. Explore life in ways only thought possible in your dreams. Discover just how far you go to expand your understanding of life's greatest mysteries. There's just one place on this planet with so much to offer. Now is the time for you to have the royal experience.
Welcome back now for our market analysis segment. In-house economist analyst Bia joins me in studio to help us make sense of what is making the day's trade. A very good afternoon to you, and thank you so much for your time. It's a big week. It's a big week rather ahead of us, and eyes are on the Fed cuts on Wednesday. Yeah. Trump is expecting big Fed cuts, and so is the rest of the world. How can the expected Federal Reserve cuts, rate cuts this week impact global equity markets?
So what you've rightly pointed, not to good afternoon to the viewer. Yes, the Fed interest rate cuts are what markets are basically looking out for this week. It's what is going to move markets. So we are expectant of at least a 25% basis point cut. I don't know whether that's going to be big enough to impress President Trump, but we do expect that to happen. And if you look at that, you can see that markets are already starting to move in that direction. When you look at, for example, the U.S. numbers in terms of the futures, you can see that they are they tend to be now on this positive outlook with the Dow Jones Industrial Average there, just showing a bit of some signs of losses. That's basically just a correction and waiting to see how the week ahead is going to look like. But then also there is the issue of those antitrust findings on NVIDIA in China. So we're waiting to see how that is all going to play out in terms of how that is going to actually affect NVIDIA's strategy going forward. But then there is also not silly another thing interesting, something very big as well, the talks between Secretary Bassett and China, just trying to come up with a deal that's going to ensure that we don't go back to this trade war again. So we're hopeful that, as day two of those talks comes into play, we are going to see, better results going forward. And then going into the European markets, what we're seeing there again is a bit of that optimism carrying through into European markets. We're seeing both, the DAX, the CAC 40 on an uptick. But notice that what we're waiting for this week is also this week and the next week. We are waiting for the European Central Bank to give us their direction in terms of the interest rates in Europe. And the Bank of London will also be giving us, direction in terms of interest rates this week. The Bank of England will be giving us those directions. So what we're seeing there with London flatlining is on the backdrop of the fact that we are, investors are expecting the Fed, the Chancellor there of the Exchequer, or the Governor of the Bank of England, to hold interest rates in London, purely because we've seen inflation also showing some signs of increasing. So markets are just waiting a bit to see what is going to happen on that front. But we are waiting to see, again, those talks between, we know that Sir Keir Starmer is also going to be in talks with, his American counterparts, just to see how well we are, if those spirits especially can make it into that deal, into that US UK trade deal. So we are waiting to see those. And we do know there's a bit of that Epstein type of commotion within number 10 in terms of that that fired secretary there. And then when you move into Asia is telling off a couple of stories there. We note that when you look at Japan and also at Beijing, there is a positive uptick. If you look at Japan, you have about 400 points gained in today's trade. That's purely because those two markets are largely being moved by the expectations of the Federal Reserve Bank cuts and also with the expectations of an increase in the interest rates in Japan. Because remember, Japan was on a negative interest rate territory for over the past decade or so. They only changed that last year. So markets are being optimistic on that. But when you come into the mainland, when you look into Shanghai, you can see they've lost a bit of some 10 points there. What's happening there, the main story is we've seen manufacturing data coming out of China showing some indications towards somewhat of a slowdown. We've seen a bit of a slowing down in those manufacturing numbers, and that's what the Chinese markets are reacting to and waiting to see if Beijing is going to come up with yet another stimulus package, and really what the plan is going to be in terms of making sure that we move forward towards new growth within mainland. And coming into South Africa, we're seeing a bit of a correction, following those, that rally that we saw last week being driven by the metals, by those precious metals that were doing relatively well last week. And right now we're just seeing markets taking a bit of a slowdown on that. And I mean, remember, in the very same background of those precious minerals is we've seen a bit of an attack on Russia oil refineries. So now that tends to cause a bit of a scare in the markets in terms of whether we are going to see yet another supply side shock coming into the markets in terms of fuel. But we do know that within the Johannesburg Stock Exchange, we're staying above this 100,000 mark because we know the metals are strong. And at the same time, we're seeing quite a lot of movements within the financials and, quite a debunking of quite a number of companies. So the fundamentals are doing very well within South Africa. And then in terms of Eswatini Stock Exchange, we have not seen any movements today. And when you go into the commodities, you realize that gold is somehow, just coming a bit back down because the expectation of that interest rate cut is actually very high right now, and we're seeing a bit of that realignment in terms of equities and commodities, and in terms of those long-term bond yields, in terms of government securities, and so gold is coming a bit back down, and we do expect it to continue this downward trajectory up to Friday. And if and unless we don't get yet another supply side shock, we hope that Russia type of story doesn't happen again. But the oil story there is telling of the fact that we've seen a bit of an attack on some oil refineries within Russia, by Ukraine. So now that sent a bit of a scare in terms of global oil outputs and in terms of the global oil price going forward. And we do hope that as we see those tensions being, reined in Israel and also within Ukraine, we should see the price going back down to $65 per barrel. And then in terms of currencies, we're seeing a relatively weaker currency today comparatively, but we are at that very strong level. I mean, remember if last week we were at that 770 type of region, and then now today we are trading at that 1735 type of region against the dollar. That's actually on the background of those strong performance within those metals, but we are seeing a bit of that outflow with that anticipation of that interest rate cut. So we're seeing the same happening across the euro and also across the Japanese yen. Thank you, Notsela.
Thank you very much, Sanele. That was economist Sanele Sibia filling us in on the numbers, breaking it down for us in terms of what is making the day's trade today. Otherwise, this has been the Monday edition of Market View. Until next time, have a great one.
for Israel and its goals in the Gaza Strip. This after holding talks with Prime Minister Benjamin Netanyahu in Jerusalem. Meanwhile, a show of regional solidarity. Arab and Islamic leaders are gathering in Doha following an Israeli airstrike on the Qatari capital last week. Attendees are expected to pile more pressure on Israel in a resolution. And searing teen murder saga, Adolescence, and Hollywood satire, The Studio dominated the Emmy Awards on Sunday, though it was medical drama The Pit that won Best Drama Series. U.S. Secretary of State Marco Rubio has promised unwavering support for Israel and its goals in the Gaza Strip during a visit to the U.S. ally on Monday. Israeli Prime Minister Benjamin Netanyahu said Rubio's visit was a clear message that the U.S. stood with Israel, and he praised President Donald Trump for his backing, calling him the greatest friend that Israel has ever had. Speaking to the press, Rubio also criticized plans by Western nations to recognize a Palestinian state, saying they emboldened Hamas.
These things that people are doing and these different countries are doing at the United Nations, first of all, they're largely being done because of their own domestic politics. Second of all, they're largely symbolic. They have really no impact whatsoever in bringing us any closer to a Palestinian state. The only impact they actually have is it makes Hamas feel more emboldened. It makes other elements like Hamas feel more emboldened. It actually has made it harder. It's actually served as an impediment to peace.
Well, France 24's Noga Tarnopolsky was listening in on that press conference. Here's what she told us.
The main takeaway